the relationship of the advisors who talk about these themes with the clients is increasingly under the scrutiny of regulators in the UK, elsewhere in Europe too. How do you characterise the changes in wealth management in the UK after the retail distribution review, where investors will know exactly what they're paying for every service?
I think the people have realized that they now want value for money. As we said, this is something we heard a lot during 2013. They are willing to pay for a portfolio manager or fund manager who are really active and who are not implementing passive strategy. For passive strategy, we know there are some very good vehicles such as tracker, ETF, which can play this role and give investors some exposure. So I think going forward, and it is already happening, investors are building their portfolio around the core satellite strategy, where you have the core, which is the long-term exposure, maybe a little bit passive. That would be more ETF. And then if they want to take some extra exposure and be active, that would be considered as the satellite. So this is clearly a result of the RDR, and this explains also the success of the ETF business in 2013. We think it is great. We are active portfolio manager, and we think definitely it's the way it has to be.
And if we look at your sister company, Lixor, which has provided much of that passive exposure through ETFs and trackers, they also have the hedge fund managed accounts platform. Hedge funds have really had a bad rap in the private wealth community since 2008. Do you see them coming back into investor consciousness too?
We think that in 2014 we'll see more discrimination among companies, actually, and among the performance of the stock market. We think this should actually create some more value for hedge funds. Hedge funds should be able to benefit from this. So we expect investors to turn more on this asset class. The liquidity bonus that we have enjoyed on any asset class or maybe any security at some point will disappear. So it would be about selectivity and about discrimination, I would like to say, in the way you select assets. So definitely, yes, we think we will be more positive and more positive on hedge funds.
But will we see a return to those really high pre-crisis allocations of 20% of clients' portfolios, or are those days very much behind us?
I'm not sure about the allocation. As currently the market is still positive and should continue to grow. So I think it will be gradual. The process will not happen one day from another, but definitely I think they would be more successful.
And there are more and more foreign institutions coming into the UK market now. Julius Baer have really catapulted up the rankings. Handelsbanken are here, KBL are here. How does it feel to have all these new competitors around you at the moment?
Well, I would say that it's very good to be in a competitive market. This is the way you can deliver good result for your clients. And I would say that the market is actually very positive, and the momentum the UK is enjoying is very positive, and this is why we are seeing all those competitors. So I think it is a positive news.
And you have this regional structure which has proved very successful for you, with the offices in Leeds, in Edinburgh, in other cities. Is it often easier to talk to these people about a story they know and love, about UK equities, for instance, rather than German, Japanese or emerging markets?
Yeah, we of course also looked after UK equities portfolio, and we are positive on UK equity. We think the momentum of the UK is actually very good. We have seen the real estate starting to pick up. I'm not talking about London here, but I'm talking about the UK. the confidence is back in the UK, which is very positive, and it has really started when Carney came from the central bank, and this is creating a great momentum. So our expectation of growth for the UK is 2.7% for 2014. So we do invest in UK stock, especially on the small and the medium cap sector, because they are the stocks which will be able to capture the most of the local market actually and the growth of the UK.